All right, so this session, you guys are going to be looking, of course, at the oil chart because this is the only trade I have going right now, shorting oil. But this session is about what is the actual DC and EMA combo, as you can see it here, and why do I use it and how do I use it. So to begin with, let's start with the question of what is the DC EMA combo. The DC EMA combo is actually a key component to the PipsMatter trading strategy. A moving average can be calculated in many different ways, but in our strategy, what we do is we're using the 30-day EMA, which literally adds up the 30 most recent daily closing prices and divides it by 30 to create a new average for each day. Now, each day is connected to the next, creating a singular flowing line, which is what you see here, the pink level towards the downside. Now, it can be used on any type of time frame. Okay, cool. Okay, good to know. I'm recording this video anyway, so it will be added to YouTube. Now, it can be used on most time frames, but I mainly use it on the weekly, on the daily, and on the 4-hour. Sorry, not 4-hour. I don't like to use it on the anything under 4 hours. So I ignore it when we go to anything else. Anything above under 4 hours. Many people ask me why use the 30 EMA. Well, my answer is pretty simple. It's preference. I feel that the 30-day EMA provides me with enough opportunities on a weekly basis, especially on the 4 hours. Furthermore to this, it is not too short nor it is too long. So it gives me the perfect balance in between. Let me just map this out here. So it gives me the perfect balance in between. So it's something I feel very comfortable with. Now, why is it important? A moving average basically helps me cut out the amount of noise on a chart and is very helpful to making good trading decisions, both for longs and for shorts. Now, how the 30 EMA and DC combo will improve your trading. The course that I'm making, which is only going to be for the PipsMatter community, it's not going to be available anywhere else, only on the actual website, is going to explain further about this, but I decided to make a very quick video about it today and show you and introduce you guys further to it so you guys understand what I'm doing and why is it on my charts. Now, I don't only trade using the EMA and DC combo, so I 100% recommend that you use price action triggers to place any orders instead of blindly placing them around the actual combo. EMAs are more of an important guide for the market. They're not an entry level. I use them mainly for breakouts or continuations of trends, such as here. You see on the 4-hour, it continues staying with it, and it's pretty simple. You could take trades on it. Also for breakouts, for example, here price action breaks down, comes back to the area, doesn't go above the EMA, and continues going lower and lower and lower. So it's good for breakouts, it's good for many things, but EMAs are, like I said, an important guide. The combo that I have here is an important guide, but I use more tools to make my actual trading decisions, and you guys know that it's mainly price action, and I just want to make sure that you guys understand that I do not predict the market, I react to the market. So if you've been watching me on WTI, the posts I've been releasing, the charts kept changing little by little, and I came to a conclusion of something, right? So, and it's going well. It's going well so far. So yeah, it's about just creating some kind of balance and constantly updating the charts, making sure that things work. So I'll show you how this is done live a little bit. A lot of volatility on WTI right now. There was it went down quite a bit today, and now it's trying to recover, but we'll see how that works out. Anyway, let's go back. So how the 30 EMA combo will improve your trading. Now, you must understand that the complete strategy that I use and how the 30 EMA and DC combo fit into this strategy is very simple, and I'm going to try and show you a little bit of this right now. There's no tricks here or any kind of tips that will make you money in the markets right now, but it's going to give you an enlightenment for you guys to understand why I use it. Now, this is why I focus on teaching and mentoring people from the ground up. I like people to come to me with a totally clean chart, nothing on it, no indicators, no BS, and no Elliott waves and all of that crap. It can make money for some people, but I don't like it because it's just way too complicated. I like my clean, quick stuff, and that makes me very profitable in the markets. So like I said, I like focusing on teaching people from the ground up and using that new 90-day PipsMatter mentoring program, which I recently launched on the website, but it's not done yet. So I like to start from square one and then build new traders up to professional trading levels. I've been doing this for a long time, and well, I'm very good at it. Now, we do this with a combination of the coaching, I mean. The coaching is done with a combination. This is how it's going to be done with on-demand trading courses, so videos, recorded videos, which I'm working on for the last 2 weeks. I've been recording them. I'm going to be doing 3 times a week mentoring classes, and of course live trading together daily will begin from this week, and we'll be doing that. Now, if anybody's interested in actually learning more about this or has any questions about PipsMatter, the trading strategy, or the mentorship program, then you need to email me directly on Dennis, that's DENIS @pipsmatter.com. Now let's move into the DC and EMA combo here to show you what I do. So the purple is actually the EMA, and the pink thinner level is the DC. What I like to do is I like to go on a bigger chart. Every Sunday I open up my big chart, my big boy chart, weekly chart, and check that out and see what's up. So you could have seen a nice breakout forming here, for example. You see this price action sticking. I'm not going to draw the lines perfectly. Price action sticking to these levels. You want to grab as many levels in there as you can so you can understand what's actually going on and where price action could reverse. So we're going to have one blue and one black, and I'm going to show you. So price action on a weekly level is making higher highs and higher lows, higher highs, higher lows. Then we have a breakout of the DC and EMA. Let's put that right there. Breakout of the DC and EMA, and price action starts taking rapid down movements. Now that doesn't mean every time price action breaks out of the DC and EMA that we should be selling and buying. We should base our decisions on other things. We should base our decisions not only on the DC and EMA, like I said before. It should be based on many other things. But that I'll teach you in due time. So we start with the weekly chart, go down to the daily, you'll see something similar happening. Okay, let's start the broadcast again. Okay, I guess I'm live again. I'm still recording those, so you guys are going to see this in the recording anyway. So like I said, the weekly chart, then you come to the daily, you see the breakout happens much earlier here. We have a retest, and then boom, continuation downwards. And then the key levels would be, of course, this black level here, which you can see both of the levels, the blue and the black, get retested right here. Right? They both get retested there. Price nowhere near the DC and EMA combo and continues lower. Now when we come to the 4-hour chart, you'll of course find much more trading opportunities. So firstly, the first thing that you would notice is that we have a new pattern which is going to the downside, and let me explain that. We have high, higher high, higher low, higher high, higher low, and then boom, we change, right? So then we would already realize that, okay, our first selling opportunity could have been done here because we could have connected the trend lines, and there could have been many other things that can be connected here. I'm not going to go into them too much, but you want to draw these lines like this. You want to get price, you have the breakout here, that's when you sell. Not when the price action touches the DC and EMA combo, when it breaks out of a trading range. Here's a short-term trading range, and price action broke out of it. Same thing goes here. Look at this. This just happened now. We have a breakout of the trading range and we're going down. We're making a retest of the bottom level of the trading range, and we're sure to continue going lower unless we get stuck in this area. Now remember, I'm going to have to Sorry, I got a little sick. Weather changed rapidly in Cyprus. So unless this here becomes a range, then we've got a problem. Then we have a problem. And this is the problem. It could become a range. So price action could move in this range before going up or down. What we want to see is a breakout of the 55,246 level that's written here, the black line. We want to see a breakout of that. The main thing we're trying to chase here is an understanding of how the markets work. That's the main thing you want to do. Naturally, price action will come back to the DC and EMA combo, regardless of what you have. 129, it's always going to come back to it because it is the average of the closing. For example, the 30 last closes here, last candles. But here's a perfect example of an entry. But I like to do my stuff live. I don't like to go in the past and say, look, this is what we could have done and blah, blah, blah. I don't like doing that. So my full review on WTI here indicates to me that there are good chances to continue selling. I'd wait a little bit more. I'm already heavy in this trade. I'm real heavy in this. I was up like 3.5K just a little while ago when price action was down here. I'm barely like $600 in profit now here. But that doesn't mean I want to get out because I'm quite confident about this and I'm willing to take a loss because the potential for profit is pretty big. What we do now is very important. We go down to the 1 hour and this is where we just draw our lines. Forget about the DC and EMA. Forget about it on the 1 hour. Doesn't exist. Doesn't exist whatsoever. Totally forget about it. So what you want to do is kind of understand what's going on with the charts. That's your most important thing. So first of all, keep your eyes peeled to the recent moves. Look at this. So here we have resistance and support, resistance, then support, support, resistance, support, 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 breakout, resistance. You see that? So that's what I just sent the guys in the group. This is a potential entry level to go short. This is a very strong candle, but we had that already before. So if we go back in time, you'll see that, look at this, boom, big candle, went a little higher, but it's sticking towards its trend lines, you see. More or less it's sticking towards them. So same thing goes here. It should not go back inside this trading range. This one here, let's make it blue. So it should not go back into the blue trading range. And if it does, then we could have a problem. If it doesn't, then we're good. Lots of uncertainty happening here on this candle. Good indications of price action going lower. So like I said, I went on the weekly. This is where the DC and EMA matters. This is where the DC and EMA are important. And you can see it is because the breakouts are rapid in movement. But we do not just trade them. Always remember that. Then we go down to the daily. That's where it's quite important. Now you can use 30 or 28, up to you. 28 is also good. But that's what I use, and if you want to join my trading room, I want to teach you how to trade my way because I make money my way. And it's not just about the trading strategy, it's about psychology as well. So if you go on my website, you'll see that I started adding a lot of that stuff there. So we want to basically understand, look at the previous moves, continuation here, then we have something similar here. Let's go into the 4-hour chart and see how this looks. So you see another trading range right there. Breakout of the trading range. I'm going to zoom in to show you this. So you need to understand how the market moves. So here, there was no retest. Breakout and it went lower. Here, boom, 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 breakout, retest, retest, and continued lower. Right? And where did it stop? Pay attention to where it stopped. Look, see? Right at the bottom here, just like what we're doing now. Came here, yes, it did make a new low, but came back, retested the trend line, and continued lower. So this is what I'm shooting for that will happen now again. So price action makes it retest, blah, 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 and continues lower. We have a big possible week for the oil markets, and I expect further losses to happen. Even though I took a beating recently, I don't know if it's going to actually continue taking that beating. We'll see. So far, the daily candles indicate good movement. I'm going to stop speaking about the DC and EMA. We have these shadows for 3 days in a row. That's Wednesday, Thursday, Friday, and then today, Monday, we try to go down, but we can't break this level yet. The 55,245 hasn't been broken yet. When that gets broken, well then, my ideal target would be the 50 level. even though I think it can go even lower. So 50 is right there. So somewhere there. That's what I would be targeting. I think it can happen, and I think it will happen, but we'll see how that works out. So guys, I need you guys to remember the facts. The facts are we do not trade just because the DC and EMA is broken. We look for reasons to get in. We must look for reasons to get in. We need to review our charts and we need to update them. Don't get stuck on a specific idea. Look, if this retests and then retests and retests and retests, you need to look at the candles. You need to understand, hey, maybe I'm missing something. Ask yourself. Always ask yourself. That's rule number 3. Number 3, review charts well before entering and ask yourself, what else am I missing? But that doesn't mean you have to only ask yourself that before you enter. You should be asking yourself this question when you enter as well, when you're in the markets, when you're in there for 2-3 days, and say to yourself, okay, is there chances of a reversal? Where could the market reverse? I did that with the AUD trade the other day when I was, head and shoulders. Yeah, I made money and I said, you know what, I'm getting out of here. And then it skyrocketed. In any case, I'm done. I need to go take care of a couple of things and I'm going to be coming back to continue with recording the other videos. WTI still a solid sell. We'll see how it works out. So far, I mean, I was in really good gains. Now I'm not. We'll see how it works out. I don't know. So far, indications are pretty good that we're going to continue lower. Will we? I don't know. Because we have the trend line support and then we have this zone here, which has acted as a support and resistance level more times in recent time than any other level, than any of the highs or lows. The low was acted only twice, 1, 2, 3. At this level here, 1, 2, 3, 4, 5, 6, and hopefully 7 right now. Okay, I'm done. I'll talk to you guys later. Thanks for watching. Thanks for tuning in. And I'll message you guys in the group as soon as I'm back home.